Good afternoon, everybody. Welcome to the Merlin Show for your Thursday afternoon edition. Yes, lots to talk about. We've got big earnings announcement. Well, one big earnings announcement with Broadcom, and then of course you have Lululemon, both rocking to the upside. And then Mike's question here is great. He says, my biggest question is this breakout. Is this a breakout or is this a bull trap that's going to get us all sucked in? Well, that is the topic of discussion. And again, I don't know 100% for sure which way things are going to go. But I did like the graphic today. And as much as I appreciate the comment that this looks like me, I'm not even close, man. I'm looking twiggy. I'm looking too skinny. Pretty lean, but not like this bull here, which is flexing his bicep, looking back at the camera like, yeah, I'm crushing this market today. Showed 1246. Bullish breakout was the topic of it. Surprisingly, my investments all did really well. My day trades today, I got caught early on this morning shorting this market because I thought we were going down today. Started off that way, looked great from a short perspective, and all of a sudden, boom, just ripped up and took a couple bucks off the table. Nothing too bad. Certainly my long positions offset that one. But let's dive right into it because I thought it was rather interesting kind of what was causing it and why we're seeing such moves. I'm going to start things off with that dollar index. Now, I've had this dollar index kind of bouncing back and forth in this range. And of course, if you're in the podcast, you can't see it. But it's basically going all the way down to $98.56. And their high side of this is going to be all the way up to about 100.36. Now, we were kind of basing against that one for a little bit, right? We came back down there and we stuck in the bottom of that zone yesterday. And I was like, ooh, boy. Either this can have a nice big bounce out of here, and that's what I was anticipating. I was anticipating this dollar index bouncing. That would, of course, put negative pressure on the equity markets. Instead, we ended up gapping down below it and continuing to sell off. So we're now down below this demand zone, which isn't the strongest in the world, but it certainly is a demand zone. And really reversing what looks like a decent trend since September. Kind of giving it all back and starting to move over here just a little bit. So the question now is, does this dollar continue to move lower? The reason we saw moves like we did today was, in my opinion, primarily because of this dollar index. That dollar index is the basis for many different commodities, and I wanted to show you some of the metals here. I've been talking about copper and its great trend since early August. You can see higher highs, higher lows. We had a nice big move today. It broke 550 today, then came back down just ever so slightly, but not a bad day for copper. Of course, this means things are going to get more expensive as copper becomes more expensive. Just from the lows we saw back in August, if we go from lows to where we are right now, copper in the last 93 days has risen 26%. Now, the good news is this is not a major component of the inflationary measures, right? Crude oil is one of the more significant ones, and that's actually been doing us some favors. But a lot of stuff here is starting to look much more inflationary. So here's copper moving to the upside. Here's palladium, not the best looking chart, but it was up 3.3% today. Platinum looking a bit better, is up 4%. And then here's the real star of the show again, silver up another 4.8%. And I talked about it yesterday. It had a great shooting star. Yesterday's candle was a great shooting star and one that I was expecting there to be downside movement. But this is why, as I get older, I like to wait for markets to confirm. I like to wait for them to confirm what they're doing. In this case, there was no weakness at all today. Really, silver was just pretty much up all day long. Unbelievable. Just kicking myself that I got my silver taken away in the 30s, and here we are at 60. I mean, it's a 100% gain. Ugh, for holding silver. Who knew? And I saw so who was that? I could have sworn I just saw someone in here say that they were buying silver puts. Where did I? Oh, Oracle. Maybe I just misread it. I could have sworn I saw someone say SLV puts, and maybe it was taken. Oh, there it is. I bought an SLV put today just as a test case. I'm kind of getting to that vibe myself, Steve. I think that silver is going to have a pullback here. I just don't know when it's going to be. So I'm certainly not going to be selling weekly puts on this bad or buying weekly puts on this one. I might go a little bit further out. SLV. There's your SLV chart. Gap and go again. Right, just looking absolutely fantastic. So at some point, I do think that silver is going to have a little bit of a pullback here, but no real reason why this trend should end, just maybe the intensity of the trend. I still think that silver is going to go up in value, but I do think that the rate of ascent here is going to start to slow down a little bit. Yeah, it's just buying SLV puts, that's brave. Yeah, it's, we talked about this on yesterday's show. When you have something that's moved as aggressively as you've seen silver move, buying when something is ripping this much, buying puts, the put are really cheap, right? No one really wants puts at this point because there's just no point. And at a certain point, it'll roll over. And when it does, that's the point that everyone wants their puts. It's like buying your insurance for fire after the fire started. Well, that's when nobody wants them. Right now, nobody's looking at puts. So I think it's probably not a bad idea. The question would be, how far out do you go? And you can probably tell us, Steve, if you want, share that with us. Like, how far out did you go on this one? For me, I would probably, minimum I'm going to be looking for is it's got to be at least 30 days. I'd rather do something like 90 days. But, I may look at this one, too, if those puts are cheap enough. But most likely, I'd like to go 3 months out. When I'm selling, I like to go 30 days or less. When I'm buying puts, I like to do 90 days or more just because I need time on my side. Although, given how quickly this has risen, I don't think it's going to take that much. Okay, 120 days? Sweet. You got plenty of time. I think you'll probably do okay with this one. One Silver Eagle costs $70. Yep, and part of that is you're paying the premium. So Joe Little says one Silver Eagle is $70. I haven't looked at what mine are worth. You guys, you remember? I got to go back and look at my receipts. But do you guys remember a few months back? Some of you were even giving me a hard time because I bought those 10-ounce bars of gold from Costco. I bought a couple of them, and you guys are giving me a hard time because I paid I think I paid $36 an ounce. Breaks down to $36 an ounce for those silver bars from Costco, and now those are looking like a darn good investment at this point. Why didn't I buy more? Trader says, I would go out far, at least 120. Yeah, in this case, certainly you want more time. The only reason I was saying to go shorter term is you obviously want time for things to settle and give, time for that specific asset to move down. But in my opinion, when you have something that moves parabolic like this, the recovery or the rebound, the pullback doesn't take that long. In this case, you have silver just in the past couple of weeks. Let me just measure this out for you guys so you can see all the numbers here on the screen. Just from this, let's do the low right back here on October 27th to where we closed today. 38% move in 32 trading sessions. That's a month and a half. In a month and a half, this thing has moved 38%. That's not normal. Even more of an aggressive ascent is what started on November 21st, which was 28% in 13 days. That's ridiculous, right? So I'm definitely a believer that this is going to come down here quick. I think it's driven off of emotion, and one way we can look at this is to look at the volume on it. Silver usually doesn't have historically high volume, and you can see what happened here in September, right? You had a real big move in August and September, and look what happened with volume. Volume surged up. You had this huge spike, one of the largest spikes of volume we have on our screen on October 9th. It rallied another 4 days and then fell apart from there. And I think you're going to get something similar. Right now, we are seeing volume getting somewhat elevated. I would love to see a climactic spike of volume. If we had volume surge up to something like that October 9th spike, which was about 110 million shares traded, that would lead me to believe it's getting a bit exhausted. Today's volume on it was 67 million. The day before, we were looking at about 54. So it's well above its normal average daily volume. I mean, if I go back into earlier this year, I'm looking at spikes of 9 million shares or 15, and now I'm looking at 50 and 60. So demand is all over the place for silver, but as we know, that demand will peter out at some point. Just the question is when. So I think you're probably good on your put there, Steve. I might join you on that one. I'll have to wait and see what happens. I was really timid today. I'll be honest. I was real timid. I had that S&P short, which I lost on, and then I was looking at the Oracle puts as well, and for some reason I just said, I'm not so comfortable with the MicroStrategy trade that I'm in. You guys know I've got the 160 strikes right now on MSTR. And the way it fell today, it just made me feel like, you know what, maybe I should just be a little more cautious and not put a lot of capital on the line. So I decided just to hold off on making new trades until tomorrow afternoon. Oracle, I see some of you are selling puts on Oracle today. Great. I mean, you're right down to that 185 line. That was the spot to be, and we bounced off that one today. So feeling pretty good now that Oracle's going to have a bit of a bounce. But on big shock announcements like this, where you have a bad earnings and bad forecast, and this revolving question of AI over expenditure, and is CapEx going to continue to go into AI? That money could flow right into Oracle. But we've heard so much about money flowing in, it starts to make me think that there's not enough to keep pushing it up. All right. Oracle paid $340 for the 180 strikes, 7 days out. Great. Yeah, I mean, I would have done the 185 just because get more premium that way. But if you went in 180s and you're out 7 days, fine. You probably, yeah, that's a nice rate of return. I mean, you're almost 2%. What did you go on that one? You went did you buy puts or did you sell puts? I think you sold puts, but you put here you paid $3.40 for the 180 strike 7 days out. I thought you were selling puts on this one to catch Oracle at that 180. I would be more inclined to be selling at 185 myself. That's what I was looking to do today, but I chickened out, backed out of that one. All right, so back to our bullish breakout. Let's get to some of these indexes, and I think okay. Yeah. That makes sense. You wrote in the chat that you paid $3.40. I'm like, oh, yeah, you got paid. There you go. That makes sense. So this U.S. dollar begs the question. This goes back to earlier when Mike was asking, is this just a bear trap where it suckers us in, and at least on the dollar, and then rips back up? Remember, we have a leader and a Secretary of the Treasury who have both been extremely vocal about wanting the dollar to be weaker. Now, I've been bullish on the dollar for quite some time. Why? Because we've been making higher highs and higher lows. Well, we had this double top that formed on November 5th that retested on the 21st of November, and now we're breaking down below the base of this. So for all intents and purposes, everything has switched on the U.S. dollar within the last 48 hours, meaning it looks much more bearish. Now, Mike, I don't know which way it's going to go, right? It could go any way. However, it leads me to believe we're going to see more weakness here in that U.S. dollar. Certainly when we lower interest rates, that makes the dollar less desirable for the carry trade, which I talked about a few days ago. So it would not surprise me to see this dollar index drop even more. Now, why the graphic today with this flexed out muscular bull? Well, it's because when you have that dollar tank, commodities, and I just showed you, silver and platinum and palladium all posting great percentage gains today. Fantastic. But look at some of the other commodities. You look at things like lean hogs, they're up 2% today. You look at cocoa futures are up 1.6%. Lean, this one kills me because I just want to get some steaks. I want to barbecue this weekend. It's going to be beautiful down here in SoCal. 1.06% jump in the price of live cattle today. And since its lows just literally 11 days ago, the price of live cattle has risen 13%. Man, these stable prices? I don't think so, man. U.S. coffee was up about 1%. And a lot of these commodities showing, reactions to that weak dollar. And I think that could probably continue here if that dollar does sell off even further. That was your softs. Of course, I had other futures out there. We talked about metals. But look at the indexes. I'll start with the good ones. Your Russell 2000. It's starting to look like a silver chart, right? We had that breakout. We had talked about the all-time highs most likely going to get hit if it broke out that yellow zone. And not only did it hit it yesterday, but we vaulted above it today. 1.14% gain for the Russell, rocking it to all-time highs. And this should be a testament to stability, to growth, to demand for small cap companies. Now, this was a question I posed to Bill yesterday. And the only way we know that if Bill's answer is right or wrong is after a period of time, if the forecast or expectation comes true. We just don't know. And that's why I love having very intelligent guests in the program, because sometimes they will present things that completely are the opposite of what I'm believing, or in many cases, it's totally in line with what I'm believing. For example, I do think that we are in a decent economic position. Granted, GDP was relatively low and our forecast for GDP was abysmal, but the unemployment numbers looked okay, inflation numbers looked okay. It doesn't seem like it's that bad yet. Of course, yes, we'll talk about the initial claims numbers, which came out today. I know, I heard about that. Did you hear about the money printing starting again December 12th? You sure bet, Jim. It's more money recycling. They'll be just selling their short-term treasury, or when their short-term treasuries come to maturity, they're going to be buying more short-term treasuries. So really, it's just about filtering back through. All right, I'll add that GF on there. Why not? GF1. I'll do it after the show today, so I don't stall and take the time. But yes, retired Jim. Definitely saw that one, and Bill talked about that one quite a bit yesterday. I feel like the market is on a little bit better of a footing than Bill does, but either way, we have to make our trades around that. So you look at the Russell 2000 today, and its big move, it tells me that there's big optimism around the smaller companies, which means I expect to see some more merger and acquisition. And that would be appropriate, because remember, some of these major names we talked about yesterday, most of the Magnificent Seven, issuing massive bond offerings to raise capital. And why would they do that? AI. But some of those companies are in the small cap category that they will be acquiring, like IREN, right? IREN is not a big company, But Iran was just bought by Microsoft for $9 billion because of its connectivity to the electrical grid. So I think that this is a sign of the times. It does make me more bullish on the equity markets. I mean, I hate to say it, but the trend is your friend till the bend at the end. And right now, you can't argue that this Russell still looks fantastic. So that was your Russell, 1.14% gain today. S&P also looking pretty good. Now, it did not break to all-time highs. That one we did not get. Let me get some of these lines off my chart. It's getting a little messy here. We did have a huge range. No doom for now. You got it, Ollie. Well, hey, it's coming, bud. It's coming. It is definitely coming. So we had that breakout above this overhead supply zone, which is one that I actually do think was fairly decent because of how quickly price moved away from it. Got that nice green candle today. Looks great, although it finished a little bit weak, right? It sold off there, and we kind of didn't finish near the all-time, not near the highs of today's candle. But look where we are. Our all-time high is 6,953 on the S&P E-minis, and right now we are at 6,907. So we're pretty darn close. You're about 45 points away, 46 points away from all-time highs, and that could happen in just a couple of days here. So looks pretty good. I do like the bit of a breakout here. Again, I think that this is going to need that dollar to continue to sell off. I think that that's what's going to drive this market. I don't think that the S&P move is going to drive the dollar. I think the dollar is going to drive the S&P move. So keep your eye on that dollar index over the next couple of days. If we continue to see that weakness in that dollar index, I think you'll see these markets go to all-time highs, particularly the S&P, which is just about there. Russell's already there. And one I don't look at all the time because I just don't care about it, but the Dow. The Dow as well looking fantastic. I mean, this is just a gorgeous trend for the Dow Jones Industrial Average. Higher highs, higher lows, just keep on going and going and going and going and going. Awesome. All-time high for the Dow today. That's absolutely fantastic move. We had a gain of 1.33% in the Dow and just looking fantastic. Now, surprisingly, when we go through these indexes, they're not all sitting there flexing their biceps like the S&P or the Russell, which had nice breakouts today. You had the NASDAQ, which it just feels stuck. Let me get rid of some of these lines. I'm not sure why they're there. I'll keep the little box. But we had a lot of volatility, big, wide range today on the NASDAQ, but it could not break the top end of that box. The S&P did, but we did not see the NASDAQ do it. And that might reflect some of the weakness here in some of the Magnificent 7 stocks. If we look at this list, out of the Magnificent 7, 5 were negative. Google down 2.27%. Some may argue that's a bullish flag pattern. It just feels like it's just sideways and not showing a lot of strength right now, but I'm not betting against Google at this point. NVIDIA down 1.55%. NVIDIA has been looking rather weak over the past month. We had a little bit of a hammer formation form today, which certainly could give you a more bullish move up tomorrow, but it feels like, and maybe this is the Oracle effect, that some of these tech stocks getting hit a little bit hard. Tesla was down 1.01%. I still like Tesla's chart, even though it looks really choppy over the past couple of months. I still think Tesla is poised for greatness. Amazon, which I'm still holding, not a great-looking chart. I was actually expecting today to be more of an up move. Again, I'm bullish on Amazon for the holiday season. If you guys saw my credit card statements, you'd be like, are you supporting it yourself? I mean, I'm buying all kinds of good stuff, man. I get this, you just, wherever you're at, you can just grab your phone and go, you know what, I need to buy that. Scan the QR code, buy it cheaper, have it delivered by the time I get home. Pretty amazing. That Amazon was down 0.65%. Apple was down 0.29 or 27. Apple's still looking great, and that's a quasi-hammer formation on today's price action. So Apple looking very bullish and really nice and strong. Meta. Now we're getting to the positive stuff. Meta was up 0.4%, but its chart still looks pretty ugly. The question is, does it retest this breakout? It had a supply zone, which turned into a demand zone, and now does it retest this one? That's a big question right around that 632 mark. And then finally, Microsoft had a pretty ugly day yesterday. 1.03% gain today, bouncing back up just a little bit. Still hovering near these lows that it's been at. We're near the lowest levels it's been since June. Not a great sign for Microsoft. Again, one of the largest market cap companies, one of the heaviest weighted in the NASDAQ, same with NVIDIA. So if these two tank, we could see a lot more downside movement here. Which begs the question, where is this bullish strength coming from? Why are we seeing it flood the S&P when the Magnificent 7 and everything else seems to be so weak? Well, or seems flooding out of the Magnificent 7 and everything else. I think that's just basically it. It's a rotation out of AI-related companies, moving a little bit more defensive plays here because the AI trade, might be getting a little saturated. And I'm in that camp. You guys have heard me say it many times. I think that you're going to come to a point like we did with the dot-com era where people are like, I don't want to spend any more in the internet. I got too much invested in it. I haven't had the dividends pay out yet. I think we all agree that 20 years down the road, AI will be running the world. But right now, you have a flooded market of money and hope and expectation in the case of ChatGPT and OpenAI with all their expenditures. At some point, we'll probably have a little bit of a sellout, a fallout a little bit. I think a little bit. Big Holly says, the Michael Burry scare. Look, I think Michael Burry is right. I think Michael Burry is correct that this AI trade got a bit too much, and he should be shorting things like Palantir. He should be shorting things like NVIDIA. The problem is, and I think I've mentioned this many times before, a friend of mine said this in 1999 or 1998 when I was on the trading floor. He said if there was a cemetery for traders who blew up their accounts, you'd see countless tombstones that said they were absolutely right. They were just too early. And Michael Burry, I think, is a victim of that. I think he was absolutely right. Let's go PLTR, which was his biggest position. He's lost. Remember, he made all of his trades before this horizontal blue line on my screen, which is September 30th. All of it was made in the quarter before that when he bought all those puts on Palantir. Massive amounts. And, you saw the sell-off that started on November 5th or November 4th, and that was a nice drop. We've already bounced back almost the whole thing. So if he's still holding those, he's underwater heavily on his puts on Palantir. Yeah, I think at some point Palantir will have a pretty big sell-off, but is it now? I don't know. We are seeing weakness. We are definitely seeing weakness in the Magnificent Seven stocks. I mean, if I look at NVIDIA, that is not a strong-looking chart now. If I go back and show you this chart, you'd all agree, okay, that looks great. And I'm going from April till August. Well, really, from August through today, it's still making higher lows. Technically, I mean, you broke that streak here in November where it made just a little bit of a lower low, but not that bad. It just is losing a bit of its energy, momentum here. Wasn't he truly also on The Big Short? I think he may have been TD. I got to go rewatch that movie. I mean, that was a great movie. I really enjoyed that one, especially the acting. It was really hard to have Steve Carell and take him serious, right? And I apologize, guys. You guys were chat. You have so much chat coming through. I love it. I love the chat discussion. I just haven't had a chance to read all the questions. There were comments. There's a lot going on here. So, yeah, I think it's going to be interesting over the next couple weeks where prices go. But to answer Mike LaRusso's question at the very beginning, I think that this market is going to continue to go higher. I think we're going to get to all-time highs. And I think that was something that Big Eb pointed out there a little bit ago. He was talking about the S&P getting to 7,000 in the next week or so. And I don't see that being a challenge. I mean, let's zoom in here just a little bit and see where does 7,000 stand, right? So let me go and I'll do a couple lines here. I'll do one at 6,900. And just to kind of give us an idea of where these levels are at and how far away, what realistically is it going to look like to get there. And then we'll go 7,000. Look, 7,000, it would seem impossible a few years ago. And now it seems like such a real reality. It's like, yeah, it's going to happen in the next week or two. To get to 7,000 is going to take about a 1.32%, 1.34% in the S&P. I mean, that's easy. That could happen tomorrow theoretically. And remember this phenomenon that happens with price. All right, I'm going to take this lower line here at 6,100 and get rid of it, and I'm going to put a different colored line right across the all-time high for the S&P. So there we are, and we'll change that to red just to kind of make it look like a ceiling. And I hope that that's red. I'm usually good on that location, not the color itself. So here we have our current market, right? Rip into the upside. Making higher highs, higher lows. Yes, it did briefly make a slightly lower low on November 20th and 21st, but it did bounce out of it aggressively. So if we zoom in here and look at the actual movements, I mean, this is very doable. Very doable. The trend is still intact. We got a breakout today. Once we get above 6,953, I think that you're going to get a very bullish move. And it's because that blue sky theory. We've broken through all-time highs. All the headlines in the newspapers are going to read all-time highs. That should really help that Santa Claus rally, which is why I'm going to continue to hold my Amazon through probably the end of the year and into the 5th day of January, and we'll see how that goes. Maybe longer, but I may start adding some more to it just because of the bullishness of this overall market. So I thought the graphic was very appropriate today. I do think Mike LaRusso said is a bull trap here. It could be. Again, I don't know. I thought that today was going to be a negative day. I thought we were going to see more downside movement, and it's the price chart. We were down today. It was definitely a big down day at one point, and the markets just came roaring back. If you look at the opening, hour, this is what chewed me up. Got me short in here, and then ended up stopping me out on the because I didn't move my stop loss, so I didn't have time. I was busy, but I got stopped out here by 7:20 in the morning, and then just kept on going. I mean, it's really a great day to go long, not short. Unfortunately, I was on the short side. I saw he said 7,000 on ETH. 7,000 on ETH, huh? Well, let's see. Merlin did see Tom Lee's prediction for 20. I didn't see his for the S&P. I hate to sound like an arrogant, cocky guy. I don't really listen to like Tom Lee or Bill Ackman or Warren Buffett when they say things about the market. I'll catch a headline post every now and again, but I really try not to follow these people. And again, the reason I don't is I don't want to feel influenced or manipulated or swayed in my thinking about the markets based off of their influence. Because obviously Tom Lee has so much, let's just say, clout in the industry. And he can change the perception of a market by going on CNBC and talking about fund strat and what they're doing and how bullish they are on one market sector. Could certainly have a big impact. I generally try not to. Who's going to win this year-end prediction on SPY and Bitcoin? It's going to be close. It's going to be pretty darn close. I mean, I guess I could give you the little update here. Let me see. Where do I keep that? It's finding all this stuff that I keep for you guys. Let's go to daily materials. I think it's in there. S&P 2025. So here we go. Bear with me as I bring this up for you guys, just so you can see it here. Bam. Okay. So right now, let's go to SPX. Just curious. I know we could, doesn't really matter until we get to the end of the year, but I'm going to bring up your daily time frame of the SPX, which is right now sitting at 69.01. So let's go look at the SPX and see who's got 69.01 or close to it. 69.02. Ron Rabiano. Wow, my cousin. Ron Rabiano is 69.02. Ron, I'm pretty sure you're probably not going to land there by the end of the year, but you're spot on right now. That would put the S&P up about 17.35% for the year. Not bad. Okay, not bad. If we look at Bitcoin, which has been, I think we're all way off on this one. It did not do anything near what I thought it was going to do. There's your Bitcoin chart sitting at 92,000 right now. It was starting to look pretty good. I thought we'd see a bigger move up and then have that market sell off a little bit. Again, I felt there would be much more bullishness. I thought we'd finish about 169. Right now, we are down for the year. So here is the chart there. At the beginning of the year, Bitcoin's at 93,759. So Jeffrey Prius, I hope I pronounced your name right, might be closest. No, it'd be Millie. Well, I'm not sure who Millie is, but Millie, it had 100,000 there, and Jeffrey Prius had 70,000. So probably between one of you two here as far as how the year goes. So there you go. Les says, I'm glad about how wrong I was. Let's revisit this. I will do a show run through at the end of the year for you, as I generally like to do. But you look at my prediction, I thought we'd be down about 7% this year. There you go. Down to 7%. And I think this is why I love what I do. And I think it has a lot to do with how you live your life as well. So I had a expectation the S&P was going to lose 7%. I don't have any accounts, none. I have 0 accounts that are negative on the year. So if I was following my belief at the beginning of the year that the S&P was going to be down, I would already have this very bearish bias. I'd be shorting everything, and of course Oliver would be calling me doom and gloom, doom and gloom, doom and gloom. No, I basically was just looking for whatever the market was giving me, and the market's been giving me just bullish trades. So even though I feel like this is way out of line, completely overdone, unbelievable, irrational, exuberance, etc., been long most of the year. And actually my biggest losing trades were 2 long trades. So yeah, we'll see how it ultimately ends up, but been a really good year to not have any accounts that are negative, and in every account except one as of today, I'm beating the S&P 500. So I'm pretty, and by a good margin as well. So feeling pretty good about that. Do I do any mentoring? I do not, Trader Thor. Nope. I teach for Trading Academy, so if you want classes or to take physical classes with me, that's generally where you can find me, is at Trading Academy. I do a lot with the crypto program. I pretty much run the whole crypto program there. Eventually, not eventually, but occasionally, I will teach their core strategy class, which is about supply and demand and basically just the foundational piece for you. And I'm going to try to, in 2026, my plan is to do a lot more physical in-center teaching. I just miss it. Those that have taken a physical class with me and had face-to-face education, nothing beats it. It's just the energy that I put into it and just the feedback that I get from the students and understanding, who's understanding a concept, who's completely lost, how can I help people get past obstacles. It's just unbeatable. So for those of you who are Trading Academy graduates, I would highly encourage you when you look at revising your trading plan, which we can do an end of the year show if you'd like on trading plans and how that all works. You should have a plan to go back and retake your classes with a different instructor, because you might take a class with me, but I'm a cynical, bitter guy. Maybe you don't like my style. Of course, you're watching the show, so you can't hate me that much. But you might take another class with someone like Jordan Matthews or Brock Pierce and be like, oh, I resonated with their style, or their trading style or personality clicks better for me. You got to keep retaking your classes, and many of you have lifetime retakes, or as long as just retake those classes. So you should put it on your calendar, retake classes this year. Maybe take it a couple times to continue to reinforce that discipline. Come to Arizona. All right. It's on the list. Certainly what I think they want me to do more would be doing the crypto program, because there's very few people that can teach the crypto program right now, and hopefully I'll train some people. So if you are deep into crypto and really enthused about it, I can, maybe there might be some space for you guys to come on board and work with me on the crypto program. Yeah, I know. I closed a few years ago. Hopefully, Ken, right now, the big push is to get a lot of these other centers back open. Obviously, COVID and other issues made it very difficult for Trading Academy. There's been changes of ownership, and one of the main reasons I'm here is that staying with Trading Academy is the leadership, is the faculty, and just the people that are there. There were some, as with every company, there are people that you just don't get along with. I think that there is, there's people that you wish would just leave the company that are cancerous to an organization, and all of those people, from my perspective, are gone. So I'm extremely happy about that, and I think that Trading Academy is doing great things and moving forward, and hopefully we can get back to the heyday where we had just centers all over the place, and that means more instructors, which more opportunity. So that's where I hope we're going, and I'm helping push in that direction. So we shall see, Ken. Hopefully we'll get DC open. Isn't Trading Academy a franchise? Why don't you buy one? No, too much work. Here's the thing. As you guys noticed from the way I do this show and the way I carry myself, I'm not a salesperson. I suck at sales. I don't want to be a salesperson. I don't want to have that person come in and try to convince them that they need to take education in trading and investing to make their lives better. I don't do that. I don't like that at all. I'm a deliverer. I love to deliver the content. I like to be the one that I'm the product, right? I want to be the one who I'll teach the classes. And maybe I could get a center open, but I don't know. Where would I open that center? SoCal's too saturated. I don't know. Not for me. I can't find any in-person events on the page. So Thor, so we have centers all over. I think there's 11 or 12, maybe 13 centers now. They all have in-center classes. And if you read the newsletter, which I don't, let me, real quick, since I'm on this topic, let's just go to Teams here real quick. Bear with me. Not in my blood. I don't know. I'm not a natural salesperson. I don't like, if someone says no, I'm like, fine. And I think that, at least in my opinion, a salesperson needs to take no and say, okay, well, you really mean yes, but you don't understand that you want to say yes yet. And salespeople, I don't know. I'll leave it at that. I know we have some salespeople in the room, and I don't want to ruffle any feathers. But here we go. So here's the new newsletter. I'll post this into the chat if you guys would like, and I think anybody should be able to view. Woodland Hills is around. Yep, Woodland Hills, and they just redid it, Danny. They redid the Woodland Hills Center. It looks beautiful now. It's great, really. Trader Thor, hey, as we expand, the Trading Academy is going to need more sales. But I posted the newsletter in there for you guys. If you look further in and you go into, here's upcoming on-location classes. So where do you live, Trader Thor? Where are you closest to? These are all the different asset classes being taught in those different centers. So if you were like, I really want to take options, well, options for the month of December, you've got, is this the December newsletter? I might be off here. I think I might have. Oh, there's a mistake in the newsletter. Merlin made a mistake and I found it. No one else. Orlando. Yeah, nothing in Orlando. We got Fort Lauderdale is about as close as we get there. On the other side. So Orlando and Fort Lauderdale is where we'd have our in-center office. And you can see right here they have core strategy being taught there this month. They have futures are going to be taught there. So just 2 classes this month, physical in Fort Lauderdale. But yeah, the newsletter is a great way for you to kind of see what's going on in your community. Fort Lauderdale has on December 13th an OTA Educates event, which is typically like, I think it's like just an in-center thing they do to help people, get a little bit better, understand the content, things like that. Then you have the Forex practice sessions. These are all the focus classes. So I'll be teaching the crypto program on December 23rd, and just a lot of other stuff here. All right. Ken says, I met a lot of people who want to trade and tell them they need good education, but they want an in-person learning experience. So I believe the opportunity here in the DC, there certainly is opportunity in major metropolitan areas. It's just the cost of getting the centers open. When you have, there's a lot of schools out there that just do online. And look, some of our direct competitors are just only online. I don't know. I mean, look, this is online, but can you guys imagine if every day at 2 p.m. we had a room and every day we did this live? How much better would that be? It'd be infinitely better, right? It'd be so much better because we could be laughing and joking and interacting with everyone. It just, there is no comparison to it. So it's one of the challenges that Trading Academy has is the cost to run physical centers and physical classrooms is astronomical. It's incredibly high from a price perspective to have physical on-location classes. Online is so easy. I can teach 10,000 at a time, right? I can teach 10,000 people at a time. Terrible. It's probably their CEO. I don't know. I don't know that one. I would not make it. I have to work. Well, you could take some time off. And by the way, we also do things. Where they'll do like an evening class. So normally, like the core strategy, let's say I think it's a 5-day class. They'll do 5 days at night for 2 weeks. So it like split it in half and double the duration. Yeah. It would be great. It would be fun. There's nothing like in-person classes. Those not only the aha moments, but the most important thing right now is, look, I can see all of your chat. I have no idea what's going on over there, right? Steven could be buck naked eating Twinkies, and Rob could be half asleep and snoring, and I don't know what's going on over there. But if I see in person, man, I can help fix things. I can help steer conversations. I know when people aren't getting it. If you're falling asleep, I can wake you up real quick and get everything going. Yeah, it's good. Yeah, it's tough to take a week off of work. That's for sure. And by the way, Luis, when I first took my class with Trading Academy back in 1998, the class was 30 days, a month. That was, you talk about taking time off. I was planning on living in the back of my truck for 1 month, believe it or not. Luckily, I got a place to stay right away. So it's been a long story. He's Abco CEO and the stock is tanking while he speaks. See, there we go. Big Eb's multitasking over there. He's not even paying attention to us. He's watching the press conference, as you should. Watch that press conference. Let's go look at that one real quick, just so we can get that under AVGO. Get that one out of the way. It's not tanking that bad. I mean, come on. You made it sound like this was like an apocalyptic type of moment. Now, it started off pretty decent, right? You had Broadcom looking real good, and then it was over 420, conveniently at 420, and now you're down at 388. So, yeah, it's had a pretty significant sell-off here, and it's interesting. That might have been right when he started speaking. I'm going to assume that is. Down about 7.71%, which gives you a little bit of a popcorn trade of the day. Oh, there we go. I got to use these graphics, man. Anyway, yeah, the Broadcom is there, but look at Lululemon. This is the one that surprised me. I just don't get it. I do not get it. I still will not. I got into a discussion today about handbags, and the young lady I was talking to may be listening right now, but she was telling me how let me look at the chat conversation here so I can get you the exact name of the bag because I want to pronounce it wrong. But it was how if you bought a Hermes Birkin bag, it was a better investment. And she's like, oh, well, it's not a waste of money to buy these handbags that are $12,000, $15,000 because you get a 2x or 3x return. I'm like, handbag giving you a 3x rate of return. So, of course, I checked my facts, and it's only moving up about 7 to 9% per year, which is not bad for a bag. Now, remember, you buy these handbags from Louis Vuitton, or from Hermes, ridiculous. You have to take really good care of that thing, and you have to make sure that it stays clean, doesn't get ripped, doesn't get dirty, doesn't get stolen, all that stuff. Ridiculous. In my opinion, sorry ladies, I think that is the colossally stupid waste of money to buy a $12,000 handbag. Of course, I'm a guy who likes to find things at discount and sale racks just because why spend all that kind of money? I'd rather take the money, invest it, grow my net worth slowly because the qualities that make you aren't your handbag or your shoes or your Dolce & Gabbana shirt. It's what's inside your brain. It's your attitude. It's your drive. It's your motivation. It's your personality. It's that type of stuff that's the real value. So she said, and I quote, most women don't see it that way. And I said, that's why I don't date most women. That's why I'm single. If you're okay getting yourself a Target handbag because it's just going to carry your ID and some personal items, we're going to get along great. I don't want a car that costs $12K. And Stephen, I would argue that most people here are probably much more frugal. Not frugal to the point where you're cheap and it's like, okay, come on, you're using a Safeway grocery bag for your purse. That's too much. But lining things up, most of you are probably doing okay because you are watching what you spend your money on, and you realize that a handbag to spend that much money is stupid. Now, is it worth it to spend $1,000 on a pair of shoes? That's a different discussion because you're on your feet all day long, depending on what your job is. So I mean, $1,000 might be a bit much, but I think for a couple $100 you can get a great pair of shoes, right? As Johnny says, logical thinking. As we know, logic and emotions are very different depending on which gender we're talking about. So I will stop before I get myself into trouble here, but no Hermes bag. And the Lululemon stuff. The Lululemon stuff is just ridiculous. I mean, these pants are so expensive. And I think I mentioned this before. Costco has knockoff Lululemon for $12 a pair, but the same thing at Lululemon's like $180. I'm like, what? I can buy like 14 pairs at Costco. And when they do get a hole or you wear out, I just throw them away. There you go. Yeah, and again, if you're a runner or you want, Hoka makes great shoes. Are they expensive? Yeah. Absolutely. Are they worth it? Sure. If you're on your feet all the day, you're running, absolutely. $200, money well spent. Absolutely. But you don't get to be a multimillionaire buying $15 handbags. Yeah, unless you have FU money, right, Big Ed? I mean, unless you're so filthy rich, you're a Saudi prince, it's like, yeah, whatever, just get me, I don't care. Doesn't make a difference. But most of us aren't in that situation, right? We have to watch what we spend around. Big Ollie says, the only thing I put money on is in season tickets to the Dodgers games or a Dubai trip to F1 racing, which is your bucket list. There you go. Those are things that are very important to you. And even though the Dodgers suck and they're the worst team in baseball, you can still support that team. It doesn't make you a loser, Ollie. I'm just kidding. Good luck with the Dodgers. Man, I'm just hoping that my Giants get back to some day of prominence so I can talk more trash when it gets down there. Shoes, watches, pens, investment. So for me, watches and pens, no. I mean, I only wear a watch now because my ex wanted to do competitions. And it actually really was great to do exercise competitions. But now I like my watch just because it links up to all my calendars and everything, so I do not want an expensive watch. Brandon Wendell will tell you this story, but I was at a party at Brandon Wendell's house one time. I was at Brandon Wendell's house one night, and his roommate, some girl, was dating this guy, and he comes over, and he's got like a $180,000 watch on, and it was this gigantic monstrosity with all these diamonds, and I'm just like, what does it do other than tell the time or show that you are very insecure about yourself, right? $180,000 watch, like someone would cut off your wrist for that. Ridiculous. Anyway, to each their own, right? To each their own. I'm gonna get bad review from all the Dodgers fans today. See, this is why it's saying I'm a Giants fan is like saying you're a specific political party, right? You'll start to alienate your audience. Look, sports are fun. I like to talk trash, and I grew up a Dodgers fan. I grew up a Giants fan. My dad was an adamant, my stepdad, Giants fan, and he hated the Dodgers. Took me to my first Giants-Dodgers game. It was pretty awesome. Good times. Johnny says, yeah, well, maybe. Dodgers are the NVIDIA of baseball. Man, now we're getting into some crazy discussion. All right. So Steve says, watch the 60 Minutes from Sunday. It's Switzerland handmade watch, all mechanical. They only make 10 orders per year. Those are some nice watches. They are beautiful watches, but how much was it, right? Would I rather spend $100,000 on a watch or buy myself a nice Apple Watch, which connects to everything. And mind you, that Swiss watch does not connect to your Outlook. It doesn't sync to your email. It doesn't have any messages, reminders, alerts. It's just a watch that's beautiful, and I respect that. But if it's $100,000, I'll spend $300 buy an Apple Watch and take that extra $98,800 and invest it. Done. Oh, $450,000 up to $3 million watch. Again, I think even if I won the lotto and had $1 billion, you would not catch me with a $450,000 watch. You'd catch me looking pretty much the exact same as I do now. That's pretty much it. All right, continue moving up. We had a big discussion going on about the bullishness of this market and kind of where we were headed. The big stuff was the indexes. Now, Bitcoin, we didn't get to gold. Gold is also part of this bullish breakout. We had this pennant formation. This has broken the pennant twice. For those of you who here every day, you remember I had this drawn to here first. And then someone said, well, could we modify it to fit that new point? Yeah, we can. Could we modify it to fit the new? Yeah, we can. But for me, it's broken, right? We are seeing an ascent here. My guess is very quickly we will see gold hit all-time highs again. And again, that has to be in conjunction with that weak dollar. I think the dollar needs to keep dropping. That'll keep pushing more money into gold and commodities like silver and whatever. The one here that was interesting. So gold broke out of the high from December 1st. Now the next stop is literally the all-time high. So the all-time high that we've got in this bad boy is 43.98 is your all-time high, which we achieved back on October 20th. That's your next stop for gold. And I think we'll probably get there. The dollar's got to keep tanking, right? This is the piece that's going to drive those commodities and indexes higher. So if you are bullish right now, you want to be just screaming at the dollar to drop more and more and more and more. Your leaders to the upside. Let me go. We haven't talked about a couple things. One thing I find interesting is we're all talking about inflation. The price of silver shooting up like this does impact inflation rates. The price of all the futures I was showing you earlier, the softs here like lean hogs and cocoa, those are all showing big hockey stick curves right now. Big moves up over the past month and a half in almost everything except you see coffee here has been kind of flat. Actually, wheat dropping. Corn's been moving up. OJ has been flat. Soybeans have fallen. Cotton, flat. But hogs, cocoa, live cattle, all ripping to the upside. That does have an impact on prices. Unfortunately, those are all very minor weightings compared to crude oil. Crude oil is just way more of a macro impact on inflation, and this is what's saving us right now. I think when you look at the action for crude oil, we've come right back down into this demand zone. Now, I had this demand zone mapped out for you guys. It's between 57.32 and 55.96, so call it $56. Today, we fell into that demand zone. Our low point today was $57 even, so we've definitely dropped into that, and we've been talking about how it's been stuck sideways in this range-bound piece for about a month now. I don't see that changing anytime soon. So the question is, does this continue to drift lower, or do we find a footing here? If the dollar keeps dropping, my guess is crude oil will start to it should have a little bit of a move up, but I think that this has a lot to do with geopolitical stuff. Supply and demand issues, a little bit different than what we're seeing with gold and some of the other commodities. But yeah, definitely the weaker of all the commodities today, and this is offsetting those inflation numbers, which is making the Fed look more and more like they're going to do more rate cuts. Because if inflation's under control, then we can continue to cut rates, which is what they want. Sunday's game at the stick. Oh man, I love candlestick. I love the baseball and the football. Baseball and football, that was great. Let's see. Crude down, gas still $3 a barrel. Yeah, there's a couple other interesting ones in here. I was going to show you the natural gas chart. Natural gas, it's funny when you look at this picture, natural gas had a real big surge, but 3 days in a row of just massive sell-off here. But look at the trend of it. You are seeing natural gas find that footing and been making some higher highs, higher lows, looking decent. So if you're long-term bullish on it, especially you're going in the winter months here, there might be a buying opportunity, but I don't usually mess with natural gas. Try to stay away from that one. Okay, what do I got? 10 minutes left. I'm going to wrap this up here. Let's go to your economic calendar. We did not get a surprise on the rates last night. Today, early this morning. Swiss franc did come out and keep their rates right where that at 0. For the U.S. markets, though, there was a couple pieces here which was of interest, and that is the unemployment claims. So here's your unemployment claims. That's a pretty significant spike. We were like at 190 something in the previous announcement, and now we're at 236. I still don't believe that 1-point data is the end-all be-all, but it's not good to see all of a sudden unemployment numbers surge like that in a very short window of time. Here we're back up to some, oops, sorry about that. I'm scrolling on this and I shouldn't be scrolling. We're back up to highs we haven't seen since September, and that may be a piece for a market that kind of hurts the Fed's perspective of, increases the Fed's perspective of cutting rates going forward. So that was a pretty important one. For tomorrow, let's go to the 12th, Friday the 12th, not the 13th, so hopefully nothing too scary going on. You have for the British pound GDP numbers, and the U.S. is super quiet. We've got a couple FOMC members speaking. You've got Paulson, Hammock, and Goolsbee will be speaking. I'm going to update my table. You guys remember I had that little table there built out of all the different voters for the Fed and what they were thinking about doing. So I'm gonna try to update this one and see what they're saying going forward. And that may change perspectives here a little bit, because I'm reading more and more about how some of these participants are now, they weren't that supportive of a rate cut. They did vote for it, but they're like, no, I don't really want to, but okay, we'll do it, which I think is why we saw the FOMC, the CME Fed Funds futures forecast drop to pretty much zero for the next meeting. Right now, there's a 75% chance they're going to keep rates right where they're at the next meeting. Yesterday was about 73%. So it feels like more of these FOMC members are of the belief that the beginning of next year we'll just be on a holding pattern. So we shall see. Dan says, I doubt that cut again next time. Yeah, I don't think they will either. I think that this is done for the year. It's a little juice for Santa. Let's get that, get the markets all excited, and then we'll slow it down next year and see what the impacts. Remember, they dropped 75 basis points, and it takes anywhere between 9 and 18 months for that to actually come out at the bottom line, impacting businesses, depending on the rate cut. So, all right, so that is your economic calendar for tomorrow. And for Friday, on the earnings front, Fridays are usually very boring, and this is no exception. You see we've got no major names here to speak of, unless you're out there trading Yangquang Energy Group, which is YZCAY. I never heard of them, but most of these are international, foreign. Not a lot of stuff here is major, so nothing to speak of on that front. So that is going to do it for the earnings calendar and the economic front. And we went through Magnificent Seven. We talked about the big buff bear or big buff bull in our market today. As we go into Friday's session, there might be a little bit of profit taking, but I think overall we're looking pretty good. It does feel like we want to see more upside movement here. It will be Whiskey Friday. I've definitely curtailed my drinking, and part of my health kit, guys, I've cut back significantly, and definitely making a difference in my appearance. Oh, I didn't get to the two questions. I got 6 minutes left. Two questions. First one is from Les. He asked about Elon Musk yesterday, and am I worried about his control? And I wanted to read this because I think it is important. He says, the reason I asked my question on yesterday's show about Musk having too much control was because in 2022, he refused to allow the Ukraine to use Starlink network for an attack on Russians within Ukraine territory. Yeah, and this is a thing where is it going to come down to a global community talking about how Musk has too much power? Because if he controls all the communications, right? And again, this is not going to be next year, but let's say 5-10 years down the road, if Starlink does in fact do what I think it's going to do, which is push out competition and get rid of T-Mobile and Verizon and AT&T, then that does give him way too much power. And I'm pretty sure the government would step in and say, you can have Starlink, but we have a say in what goes on. You can't be censoring things. I do respect what he was saying, which was, I don't want my satellite used for war. I don't want it used to coordinate attacks and things like that. And I kind of respect that, but where do you draw that line? So yeah, that is definitely an area of concern, Les. It's an interesting question. And that does concern me a little bit, because he is kind of a wacko dude. Although I do think he is more on the side of peace. But, and the second one was from Naum. Naum says, when a company issues corporate bonds, is that the same as a company diluting stock? No, it's not. Diluting stock would be they're either releasing frozen, locked up shares and putting it on the market so it dilutes the value of it, or they're issuing new shares. So it's specifically about diluting the value of the share of stock by issuing more stock. With a bond play, what they're doing is they're raising capital. So they sell the bonds basically to raise money for the company. It has nothing to do with the stock prices. Now, one thing that it is a little tricky here, that in the priority and during a bankruptcy, so let's say Meta does a $125 billion bond offering and they still have Meta shares. if Meta raises 125 billion and all of a sudden they go bankrupt, right? They just they ran into bankruptcy. The bondholders get priority first before stockholders. So let's say there's no money, there's only 125 billion left in all the assets of Meta. Those assets would be sold and the money would go to bondholders first, and the shareholders would get bupkis. They get nothing. So that's how it works. It doesn't dilute the value of the stock. It does change the priority during a bankruptcy. From my perspective, when you do a bond offering, typically, depending on what the bond offering was for, was it at a stress moment where the company is throwing a lifeline trying to raise money? Or is it what the Magnificent Seven companies are doing, which is looking forward and saying, this is cheap capital. I'm raising as much as I can now. That is actually, in my opinion, very good for these companies because they're raising money super cheap. That allows them to fund their businesses more effectively going forward, which should reflect in stock prices actually going up. So great question there. All right. Want to make sure I got through those. Hope you guys enjoyed today's show. If you have something you want me to discuss on tomorrow's show, email me at tradermerlin@gmail.com. Of course, it's a Friday show, so I will be having a glass or maybe two of whiskey. It's been a fun week, so hopefully you guys learned something along the way, and if you have anything you want me to discuss, let me know. Either on my YouTube page, so go to YouTube, find Trader Merlin. You can comment below any of the videos, even the one you're watching right now, or just email me, and I will see you all on tomorrow's show. Thank you, everybody. Have a great Friday.